June 6th, 2024. Some really interesting stuff happened today. In general, first off, whenever you get an outside up day, meaning the day traded below the prior day and then above the prior day, same statistic for an outside down day. But whenever you get an outside up day, there's a 70% chance that you close in the upper third of the day. So outside up today, 70% chance we close in the upper third. Today was part of the 30% of the time that we do not. We got a wedge, you can see, to bar one. So this low, that low, and then bar one. So three pushes down. Expect at least two legs sideways to up. Bar one is probably some sort of trap. But at the same time, you have a gap down and a good bear bar. So potentially always in short. Why is bar one probably a trap? Well, the reason that I thought it might be, oh, I clicked the wrong thing. Just change the study. The reason I thought it might be is because look, bar one, and then we got a trap, right? What about the prior day? Well, we got a spike, and then we got a trap that looked relatively similar. What about the prior day? A spike, and then a trap. What about, and even though the signal bars look pretty similar. What about Monday? A spike, and then a trap. So what do you think is going to happen today? The same thing that traders have been doing all week, where you get a bear bar, and then it turns into a trap on the open. It's happened multiple times this week, so it just might happen again. The market likes to repeat patterns later in the week that it repeated earlier in the week pretty often. Even today, you can see, look at yesterday. We ended up getting a surprise down 54, 55, 56, and then a reversal up 57. Surprise down 54, 55, 56, 57, and a reversal up 58. Obviously, it's not always perfect, but you can see literally we did the same thing twice in 2 days, and it looks extremely similar and on basically the same bars. So when the market starts to do certain types of patterns early in the week, you should keep those patterns in mind because it often tries to repeat them later in the week to some extent. So bar two, a bull bar, but a big tail on top. Can you buy above bar two? It's reasonable to buy above two and hope that you've seen the low of the day, but it's definitely not a scalp. It's more of a swing. You're hoping bears are going to exit and then we're going to get some sort of big follow through and bulls will buy it. And as you can see, if you had bought above two, you get a big bull bar closing near its high bar three, which is really important. So we now have consecutive bull bars, 2 and 3. We're always in long, probably going at least a little bit higher. What are the odds that this turns into an outside update at this point? Probably, 40%, maybe 50%. Probably more like 40 though. But either way, good for the bulls. Consecutive bull bars, at least one closed big and closing near its high. 5, more follow through for the bulls. So we now have consecutive bull bars, 3, 4, and we're probably going at least a little bit higher. Follow through on bar 6, on bar 5, but a big tail on the top, so it's a bit climactic. We're 60% chance that we end up getting some sort of measure move up, but the pullback could be relatively deep. And what's something you notice? We do have an open gap currently with the 2 high and the 5 low. That will become some sort of magnet later in the day if this is to be a trading range day. So I thought this sell-off down here was trying to test one of 2 points. Either the start of the channel, right? Because the spike was bar 3, and then we got the pullback on the tail of 4, and this whole thing was a bull channel. So I thought we were either going to test the 2 high so that the bears who sold above bar 2 and scaled in higher would have been able to get out, or I thought we were going to try and test the channel low, which was the bar 4 low, which is what we ended up testing. So spike and then pullback 4, and this ended up being, the whole thing ended up being a channel upwards. You can see we tested it on 58. So big tail on the top of bar 5. We're probably going a bit higher, but we might have to pull back. But I'd imagine there will be buyers below bar 5. That's probably a pretty reasonable limit order buy. 6, a doji bar. So disappointing for the bulls that we ended up getting our first bear close, but I think still reasonable to be long. We're always in long and probably going at least a little bit higher. 7, follow through for the bulls, but a tail, so not really all that great. If you had bought, traders aren't really wanting to buy above a doji bar like 6. So most likely if you sell above 6 and you scale in higher, you're going to make money. However, you don't really want to scale in against the always in direction. And we are always in long. One of the magnets we might try to be testing is the tight trading range from yesterday afternoon. So bar 66 through 81 was a tight trading range, and tight trading ranges are magnets. So it was reasonable to think we were going to test back into this area, basically with this spike. 8, an inside bar. It's a high one for the bulls. So we broke to a new high on 7. And we got a pullback and an inside bar. So it's a high one for the bulls, but it's not really all that ideal. It's a smaller bar and big tails on both sides. And the prior bar has big tails. So really 3, 4 were the highlight of the day for the bulls so far. But since then, we haven't really gotten many good bull closes at all. 9, you can see there are buyers below 8 because it's a bull bar. So bears don't really want to sell below 8. 8 is a micro double top 7, 8 and a double top 8, 8, 5. But it's really not very good to be selling. It's a minor reversal at best. We're probably going to find buyers not too far below and go higher. I think it was important that 8 ended up having a doji close, giving bulls some confidence that we're probably going to go at least a little bit higher. Bulls are more likely to buy above a doji bar than they are above a bear bar in this context because the doji is at least still follow through. Computers will look at 9 and think, well, it wasn't a bear close, so it's still follow through for the bulls, although it's really not ideal. 10, a big bull bar closing near its high. We could have some sort of wedge, 1, 2, 3, or we could be forming a bigger wedge, 1, 2, 3. But either way, when you see 10, it's probably a relatively 50-50 breakout. 50% chance that we end up getting some sort of bounce, which we did, and 50% chance that we reverse back down. I think the problem with buying above 10 is you're buying in the middle of yesterday's tight trading range. So this is, in a way, a final flag for the bulls. In the gap down, you can see we got the lower low double bottom or the big wedge. And a lot of times that will lead to a test back into the middle of the tight trading range, which is what we got here. Bar 11, a doji bar. So if you bought above 10, 11 is follow through for you, but is that really the follow through you wanted? If you're taking a trade where the probability isn't quite as good as you want it to be, a lot of the time, you're going to be a bit more cautious if you get some sort of follow through like 11 when you wanted to see a really good bull follow through bar. 12, another doji bar. So disappointing on bar 12. Or sorry, a small bull bar. It's still a bit disappointing. I think if you were long and you wanted to see, a bigger rally, if you bought above 10, you were hoping to get some sort of urgency, and it's bar 12, and the market is more or less at your entry price. So you've been sideways for a couple of bars now. I think that it's okay. If you bought 10, I think it's hard to just sit in the trade. You definitely can because we are always in long. We're in a tight channel up, right? So spike and then channel, but the channel is really tight. So it increases the odds we might end up getting some sort of upside breakout. 13, a bear doji bar. Disappointing. Double top 11, 13. Or sorry, double bottom 11, 13. Probably were buyers below 12. So the buyers below all these bull bars, buyers below 5, buyers below 8, buyers below 12. Probably going to go at least a little bit higher, but the upside might be somewhat limited. Again, usually after you get a spike in a channel, it turns into a trading range. However, like I said, the channel up from bar 4 to bar 13 is pretty tight, which is good for the bulls and increases the odds we might get some sort of upside breakout attempt. And then you get a huge bull surprise on bar 14. If I'm long and I see 14, I think a lot of traders just take profits. If you're holding long up here, you're probably betting we're going to test this magnet and test this magnet, which is around the all-time high. And we got a surprise breakup to the upside 14, 15, but we're testing, we're at the new all-time high. We're probably going to pull back. If you're buying the close of 14 or 15, you need to either have like a stop below here, be willing to buy more as we fall to maybe like 50% pullback. So I don't know. You probably, if you're buying these closes, you need to be, adding more somewhere down here. So it's really hard to be buying the closes of 14 and 15. Quite frankly, if you buy the close of 14 and you get 15, probably just take your profit. You probably make a quick 5 points. You're probably not buying above 15, but yeah, you can make 5 points buying above 14 and during 15. And if you buy the close of 15, again, it's okay to do in theory, but you have to understand the type of trade you're taking. You're buying really, really high in what's probably going to develop into some sort of leg in a trading range. Once you see 14 and 15, they're the biggest, most climactic bars. And we're 15-ish bars into the trend, 14, I guess. And so the 60% chance that this is going to be the last leg, or that this is the end of the trend, and 60% chance that we get one more leg sideways to up, but that one more leg could be after a deep pullback. So it's hard to want to buy all the way up here. Additionally, this whole rally started with a bad signal bar on 13. Usually huge bull trends do not start with bad signal bars. So that's, a little bit more against buying up here, and you're breaking to the all-time high. And we're gonna pull back and test the all-time high. We're not just gonna blow through it and get some huge rally. That would be really unusual. 15, or sorry, 16 disappointing bar. If the bulls who are buying up here, the moment they get disappointed, a lot of them will just exit at the market. And that's why we get a micro gap down on 17 and a bear bar, because bulls are exiting. Some bulls prefer to wait until they see the bear bar before they exit. So they wait until they see 17, and then they either exit at the close or they exit just below the low of the bar. And that is what causes the big bear bar closing relatively near its low on 18. Consecutive bear bars closing relatively near their lows. Are we always in short? Maybe, probably not. I would say on the close of 18, the Bears probably need one more bar. And I would say on the close of 19, we are always in short. But ask yourself, is this big bear trend always in short, or is this probably trading range always in short, where any sort of sell-off is probably just going to be a leg in a trading range, and it's not going to go as far as you want it. So right as the market becomes clear on 19, you can see it's pretty much the end of the leg in the trading range. So really not all that ideal. And I think the Bears, if you sold below 19, you were still able to make a scalp, still able to make 5 points. But it's really, it's hard to take that sell with that much risk and exit with 5 points. More follow through for the Bears on 20, but a big tail on the bottom. This is getting increasing size tails and clear tails. So it's really not as good as it could be. But we are getting, not very much on the tops. So traders are more interested, you can see, in selling the closes of bars, less interested in selling below bars. 21, a reversal up. 21 is an interesting bar. We have big up and then we have big down. And so we have confusion. So it's probably going to lead to a trading range. You know that this is strong enough for a second leg, which we got on 22. But you also know that 21 is probably going to lead to some sort of minor reversal. And you have to be thinking that the traders who bought above 15 did a reasonable thing. And so they're going to scale in. And they know that 60% chance we get back up to the close of 16. And 80% chance that we get to the midpoint of bar 16 and bar 21. So 80% chance that we're getting here. And you can see that's why we rallied there relatively quickly. So really reasonable buy above 21. It's a high one, but after a really deep pullback, it's a pretty strong buy. 22, a bear bar closing near its low. If you buy above 21, do you exit below 22? Nope, I would not. I think that 22 is more likely a second leg trap, and it's unusual that 22 will get good follow through. Occasionally it will, but if it does, we're getting back to the 21 high because it was a reasonable entry. So the traders who buy above 21, when they see 22, they're probably willing to buy more below 21 and try to get back to the 21 high and make at least a scalp on that trade if this does not go their way. So I would not exit below 22. Again, you knew that 17, 18, 19, and 20 were strong enough for a second leg sideways to down. So this is the second leg sideways to down. Big outside up on 23. It's a good bull bar closing near its high, but it's erasing a lot of the edge. It's okay to be long because we have magnets. The 18 low, we have, as I said, the midpoint of these two, which was up here. So, and then a 5-point scalp up from here is somewhere in here. So we had basically 3 pretty important magnets up in this area. So we're probably getting there. 24, a small bull bar. It's follow through for the bulls who bought above 23, but it is relatively minimum follow through. Again, I think, it was reasonable to buy above 23, but I think the buy was above 21. And you can see on 25, we reached a lot of the important magnets and traders just exited. There would be some bulls. It's important, the fact that the bulls who bought below 16, you can see on 18, they were not let out. So this little gap is really important because it even further increases the chances we're going to get back to this low, and that whole area is going to get retested. So some traders will hold, hoping that 25 closes on its high. A lot of traders scalp out when we get to that midpoint because that's the trade they took. But a lot of traders will hold, hoping 25 closes on its high, and they're going to get lucky, and it's going to rally all the way back to the bar 16 close. But instead, we end up with a pretty big tail on bar 25. So a bit of a disappointing bar on 25. And what happens is a lot of traders, they were hoping that we were going to get to a certain area, but we didn't. And they see 25 and they just exit, and that causes 26. 27, you can see some traders waited for 27 to rally towards the 25 high or the 25 close and then just exited. That causes 27. But with the tail down on 26 and the tail up on 27, this could be 2 legs or second leg sideways to down. So after you see 26, we might get a second leg sideways to down. And I would argue that the second leg sideways to down could be considered 27. 28, a bull bar. It's an inside bar. It's a high one for the bulls. I wouldn't buy it. I think that you're buying kind of high in what could form some sort of trading range. We might have to go a little bit lower here. So I would rather just wait patiently. 29, disappointing follow through, and then a bull bar on 30. So really not all that great. A lot of traders who bought above 28, disappointed 29, are using 30 to exit, which makes a lot of sense to do. And then you can see we traded below 30, probably buyers below 30. You know that it could be 3 pushes up. So we have, 20, 25, 24, sorry, 23 most likely resets the market cycle. So the move up 23, 24, 25 probably does reset the market cycle. And so we might need a second and a third leg up. Some traders would argue that 28 and 30 are that second and third leg. So it's definitely still a reasonable buy below 30, but I think that, it's on the moving average. It's a bull bar. We're always in long, but it might be, we might get a little bit more sideways to down first. 32, a bull bar closing near its high, but a micro gap down. I thought that this could be some sort of, micro wedge, 27, 30, and then maybe 33, or maybe some bigger wedge, 1, 2, 3. So I wasn't really all too keen on buying above 32. You can definitely do it though. It's always in long and it's a bull bar closing near its high. But also look what we're getting here. Bear bar, bull bar, bear bar, bull bar, bear bar, bull bar. So what do you think 33 is going to be when we've had alternating closes for the past 6 or 7 bars? 33 is probably going to be a bear bar. So, it makes it a little bit even more difficult to buy above 32. But again, probably relatively 50-50 chance we get a breakout above the 25 high. And we do get the breakout above on 33, but a reversal back down, bear bar closing near its low. Bulls will exit below 33. Some bulls didn't want to risk this much buying above 32, putting a stop below 31. So when they see 33, they just buy the close of 33 and put a stop directly below it, knowing that most traders are just going to end up exiting if we trade below 33 anyways. So 34, a bull bar closing near its high. Good for the bulls, probably going at least a little bit higher. Consecutive bull bars closing near their highs, 35. So we're always in long 35. It's okay to buy. We're probably going to test the 16 close, which is right here. I think if you're buying up here, though, you're probably not trying to trade it in an always in way. If you're buying this high in this trading range, I would be looking to exit at the 16 close and then see what you get. You can buy 34, 35, 36 and just exit below 37. It's not wrong to do that, but it's really not ideal. I think you should be buying, if you're buying 34, you have a goal in mind, and that's to get to the bar 16 close. Additionally, we have yet to break out of the 18 bar range so far today. So increased chance that we are going to go above the high of the day, but probably a lot of sellers at the 16 close if we get there. So 35 consecutive bull bars. First time we haven't had an alternating bar in quite a little while here. So good for the bulls. Buy the close, 35. More follow through 36. Again, we're getting close to the magnet, which is the 16 close. So it's not as ideal as it could be, but it is okay to buy the close of 36. And then a bear bar closing near its low, 37. Bulls will exit. Bears can sell for 2 legs sideways to down. I think that we are going to get 2 legs sideways to down, and you'll probably be able to sell below 37 and make a 5-point scalp. It's, lower high and some sort of wedge. You could argue 1, 2, 3, 1, 2, 3. There's a lot of different ways to draw it. But, wedge channel up, but decently tight channel up, and a trading range day. So you'd have to imagine that 37 is probably going to be more of a scalp than it is going to be a swing. Follow through for the bears on 38. And then you can see 39 traded down to the moving average and around a 4-point scalp, and traders exited, causing the bounce up on 39. And then 40 became a big bear bar at one point. Traders were able to make the full 5 points, and then it got bought up. But some people would think when you see 37 through 40, you probably need another leg sideways to down, and that's true. However, think about the logic of what's happening when the second leg starts. Some traders sell below 37 and they just want to trade the first leg. They know they have protection in a way because they have the validity of should get a second leg sideways to down. So they know when they're selling 37, they see 38. And even if we start to get a bull bar on 39, they know that they're probably going to get a second leg sideways to down. However, they saw 39 stalling around the moving average, and this is the first leg down. And they think, well, I have 4 points. I don't really want to be I don't really need to be greedy here. I think I can just take the 4 points. And that's what caused the bounce on 39. So what causes the pullback after the first leg is the traders who sold and got a quick scalp and they're exiting. So I would argue that the rally up on 39 is the first leg, or is the end of the first leg. So down 37 through 39 and then up on 39. And then we went down again on 40. So I would say that 40 in a way is the second leg sideways to down, a breakout attempt below what is somewhat of a channel line here. But I thought 40 was the second leg sideways down. So it was more likely to me that traders were going to start to exit. And you can see some traders held hoping that 40 was going to turn into this big bear bar and we were going to start to swing down. But instead, they got a disappointing close, which is relatively expected in a trading range. So what do? They exit at the market. We start to get a big bull bar closing near its high 41. Can you buy 41? You probably can, but I wouldn't. You're buying after 4 bear bars. If you are taking the buy, this is the kind of bar you would want to see if you're going to buy against 4 bear bars. But I personally, just as a rule of thumb, do not want to do that. Follow through for the bulls 42, so consecutive bull bars, always in long. But how much higher are we really going after those 4 bear bars? I thought those were rather disappointing, so I'd rather wait and see what we get. And sure enough, you get a bear bar 43, probably going to get back to the bar 40 high at some point today, since the traders who sold there and scaled in should make money. You can see we got buyers below 42 during 43, an inside bar 44, and then outside up 45. Good for the bulls, but big tail on the top. Again, not as good as it could be. I think inside, I lost my train of thought. Hold on. So outside up bar 45, but not as ideal because probably sellers at the 42 close. If you bought the close of 42, which was a reasonable thing to do, you would be disappointed in how 43 looked, obviously. So you'd be scaling it lower at maybe 50%. And then those traders exit up here during 45. 46, a bull bar, but a big tail on the top. Again, this is not as ideal, I think, as it could be. And then a huge bull bar, 47. So I would say there's a wedge, the whole wedge channel, really 1, 2, 3, and then we're getting a breakout above the wedge. Either way, I think the breakout is relatively 50-50 on 47. You really want to see 47 close on its high and not get a micro gap down. So I thought those things were rather disappointing. Instead of buying above 47, traders just ended up exiting at the market, and that causes a huge bear bar 48. There's probably buyers below 47, but this is not the area to buy. I think 47 was the attempt to start a new bull trend, and it failed. So when that attempt fails, this is now a trading range. If you're thinking it's a trading range, how far down can we test? Well, we could test pretty far down. So I think it's hard to buy below 47 because, although this should get a second leg sideways to up, the pullback could be pretty uncomfortable. And you're not really sure how far down we can go because it is a leg in a trading range now. 49, a high 1, but this is not a bull trend. 48 made sure. 48 was a clear statement by the bears that this is not a bull trend. I think we should at least test back down to the bar 40 high. Or at the bare minimum, I would suppose the first target would be the bottom of the most recent buy climax, which would be this low, so the 45 low. Outside down 50, so bear bar, but a big tail on the bottom, outside down. 51, we have a double bottom. 50 and 51, we have a double bottom, maybe some sort of wedge, 48, 50, 51, but I'm not buying above it. You could argue 51's a high 2, high 1, 49, high 2, 51, but probably sellers not too far above. Disappointment 52, and then a bull bar, but 53, but probably buyers below 53. But again, this isn't like the area to be looking to buy. You want to be buying when we're clearly always in long. If you want to buy below bars, it's better to do it when we're like clearly always in long. You buy below 5, you buy below 8, maybe some sort of bull trend. That's the best time to be buying bars. Or if we're in a trading range, you want to buy below bars that you think are towards the bottom of the range. So for example, I think bar 21, had we traded below it, a lot of traders probably would have bought it thinking we're going to get back to the 21 high. If you're buying below bars like, 49 and 53, it's really dangerous to do because we're probably, this does not look like a bull trend. It looks like a trading range. If you're buying up here, you're buying in really high in what is most likely a leg in a trading range. So it's pretty dangerous. And if you do take that sort of buy and you get a bear bar closing near its low, like you do on 54, I think most traders would just exit the trade. And that's exactly why you get a bear surprise 55. 54 was a reasonable sell. The problem with it was 48, 49, or 48, 50, 51, and 54 looks like 3 legs down. So if you get 3 pushes down, a lot of times you don't want to trade against that in a trading range. But we had magnets below the 40 high. I thought the 22 low would be a magnet, and eventually the 2 high if we got there, and obviously the bottom of the channel, the 4 low. But yeah, anyways, you can sell 54 for a swing, I think, but I'm not really sure it's a great for a scalp. And then you get a huge bear bar closing near its low 55. Usually in trading ranges, huge bear bars and huge bull bars are things to avoid. But I thought we had enough magnets below that it was credible to take this kind of sell below 56, below 55. But if you're selling below 55, you're hoping that, we're going to go try and vacuum test some sort of magnet, right? You don't know which magnet. It could be the 22 low, could be the 4 low, or it could be the 2 low, or the 2 high. But in general, if you're going to get a vacuum test in a trading range, it's going to be a big bar and it's going to move really fast. And so that's why I thought 56 was concerning for the Bears. When I did sell below 55. I took the sell thinking, in the next bar, I want to pretty much test the 2 high. I want this to move fast and get to the 2 high. And I was concerned that we started stalling on 56 and we got a big tail. I thought that showed a lack of urgency. So I thought that it left too much edge on the table for the 2 high to be the magnet. So I started thinking it was possible that the 4 low was the magnet, or the midpoint between the 4 low and the 2 high was another possible area, because sometimes the market will test the midpoints between 2 magnets rather than the actual magnet. 57, a big bear bar closing near its low, but it's not big enough. If I'm, why are we getting a bear bar here? If this is a trading range, right? Are you under the impression that this is a bear trend or a leg in a trading range? It's probably a leg in a trading range. So it's really hard for me to look at 57 and think it's a sell the close bar when we have magnets so close. And why aren't we testing them quickly, right? The market should not be leaving this much of a scalp on the table. Usually it moves really fast when you get vacuum tests, and it doesn't, like over here, 54, 55 was the credible sell, but the moment that, but 56 just got way too big. And so traders lost interest in selling it. But I don't understand why 56 and 57 is still leaving traders edge on the table. So something is wrong with this. And when it's suspicious like that, a lot of traders are hesitant to trade, and that's why you get the reversal at 58. 58, probably somewhat similar to 21. You can buy above 58, 80% chance you get to the midpoint of the bar 47 close and the bar 58 high. You can see that's exactly what the market was paying attention to. So you buy the close of, some traders bought the close of 47. They know that they're going to be able to scale in and make money. So they sell more higher, or so they buy more lower above a bar like 58. The signal bars are never all that great a lot of times at trading ranges, because then it would be exactly what you want to see. And trading ranges never really give you exactly what you want to see, because it needs to leave edge for both sides. So 58, a bull bar, but a tail, not as good as it could be. But bears will exit above 58. Bulls can buy, follow through 59. But again, a big tail on the top, so not as good as it could be. We're probably going at least a little bit higher, though. Follow through for the bulls 60, but again, we have big tails 58, 59, 60. It could be some sort of wedge on a smaller time frame. Then 61, a bear bar closing near its low. I think it's hard to stay long if you bought 58 when you see 61, but you do have a credible magnet above, so you probably don't have to exit. If you do exit, you can probably buy again above 62, outside up, and just go for the scalp. You get follow through 63, but I'm not buying 63. This is a tight channel up, but we just got a tight channel down, and we're around maybe a little bit past a 50% correction of the bear spike. So I think the buy was, the buy was 58. It's not up here on 63. And legs in trading ranges often tend to look their strongest at the tops, like 14, 15, 57, and 63, right? And they look the weakest at their bottoms, like 20, 21, 54, 58, things like that. So that's why trading ranges are, bar 2 is a good example as well. So trading ranges are tricky that way. 62, 63 consecutive bull bars, always in long, but could be a second leg trap up from 58, 59, 60, and then second leg trap 62, 63. 64, bear bar closing near its low. I'm not selling. I'd rather just wait, but you could probably sell it below 64 or 66 and go for the midpoint of 57 and 66. But anyways, high 150 or 65, but not all that good. I think it looks like a third leg up. This is probably a trading range. 66, a bear bar closing near its low. Are you selling 66? I'm not really sure that I would. I think that, again, the channel up was pretty tight and we got a couple legs. It doesn't look like a clear buy climax the way that 54 through 57 looks like a sell climax, and the way that 17 through 21 looks like a sell climax as well. 67, a bull bar outside up, but not really all that good. And then 68, 69, follow through for the bears. At this point, we've pretty much tested all the magnets. I would just be done for the day. And you can see we pretty much just started to go sideways for the remainder of the day. You got a double bottom 71, but probably a minor reversal at best. Bull bar 72, but at the moving average, and traders exit. And that's why we get the tight channel down. So it was 2 legs down towards the end of the day. You can see. For stop orders, 2 was fine. Buy the close 3, 4. Prop 10's fine, but a lot of doji bars, so hard to hold. You can buy 14 or 15, but you're probably buying high in the trading range. 21 was a good trade. One of my best trades in the day, I think. 23 is a good trade. 32 is fine. 34, 35, 36. Buy the close, but you're getting pretty high in this leg, so not great. 37 for a minor reversal, yes. I would not personally buy the close 41, 42, but you probably can. You could probably sell 54. I'd rather wait for 55. 56, maybe sell the close. 57, I don't know. Something's not right. Why didn't this bar get bigger? And we're in a weird spot. So I would be suspicious about it. I think it's better to sell the close 55. And then reversal at 58. I think you can buy. The best thing I did today. I sold 55, and I actually exited most of it below 57, and I exited the rest above 58. I don't usually get that good of fills like that, but I just happened to perfectly pick it this time. But I've bought a billion tops before and sold a million bottoms before, so sometimes it goes the other way. 58, a bull bar, but a big tail, but okay to buy above. I would not buy much higher than that, though. Then I'd probably just be done for the day. You could probably sell 66 looking for the, like I said, the test the midpoint, but I'd probably just be done for the day. And limit orders early in the day, I thought easy buy below 5, easy buy below 8, and probably buy below 12 as well. It might be some sort of wedge channel, but it's probably reasonable to do those. And if you get a bear bar closing near its low, you just exit. So pretty easy management on those trades. So disappointment, right? You have to figure buying above this bar, you're probably going to get something mildly disappointing. Did we get a bear close? Let's see. Yes, it was. Okay. So just making sure we close below the open of the day. Open of the day. This is going to be one of those funny things where on SPY, which is it's what the E-mini is mimicking, is the S&P. And on SPY, it's going to be a bull close. And on the E-mini, it's going to be a bear close. I suppose the SPX rules all, so bull close. But either way, it's a low one short, an outside down bar. Disappointment if you had bought above here, so traders might start to exit. Like I said, what does this look like? This looks like a leg in the trading range. So as strong as this is probably all just a big leg in a trading range. You could argue, this whole thing on a higher time frame is probably really tight channel and a spike, so pull back and then maybe channel, but we could easily test back down to the bottom of the channel. I'm not overly convinced this gap is going to stay open down here. We might have to start closing gaps. I'm not saying we're going to get there like tomorrow. It's going to take a while, but I'm just not overly convinced that this is a bull trend instead of a leg in the trading range. And if that's the case, we could fall and close the gaps within the trading range. And if we close this gap, I think we're definitely closing this gap too. So I don't know. I'm not overly convinced that we're gonna stay up in this area because I think this is all a big leg in a trading range. The weekly chart, a bull bar, but huge tail on the top, right? So not what you wanted to see if you bought above this high one. You did not want to see that big disappointing tail. So I think, again, traders might start to look to exit up here rather than look to buy more. Next week will be telling. But I would not be surprised if we get a bear close next week. All right.